they may have to lift the lid on the Social Security lockbox. As for the Fed, it said the risks still remain weighted toward conditions that may generate economic weakness. And Lou, you know the translation. It means there could be more rate cuts down the road.
Okay, Tim, thank you very much. Tim O'Brien from Washington. Well, Treasury Secretary Paul O'Neill was among those officials who were on the balcony to open trading at the New York Stock Exchange today. And earlier, I asked him for his thoughts on today's market.
I'm very pleased the markets are open again. It's a beginning and end note for the U.S. economy that we have, in effect, a world financial switching center where buyers and sellers come together and make markets, and not having them for 4 days is really very unusual, not since the First World War. It's nice to have the markets back in business.
These markets been closed, as you say, for 4 sessions. It has been a very long time indeed since that has happened. With that pent-up frustration on the part of buyers and sellers, this is not an entirely unexpected result in at least the early going today.
Well, I think that's right. You have to always remember when you're looking at markets, for every seller there's a buyer, and for every buyer there's a seller. My guess is when we look a year down the road, the people who bought today are going to be the happy people. The people who sold will be sorry they did it.
Well, this morning when you and I talked earlier, you said you felt that we would see new records in this market. I guess the question to follow up with here a couple of hours later is how soon?
Well, I don't know. I think it's conceivable we could be approaching the tops on the Dow side in another 12 or 18 months. Well, no one knows for certain, but I think we've not retreated so far on the Dow side that we couldn't be looking at the records again when we get into the middle of the next expansion phase in our economy.
The expansion phase of the economy, a lot of mixed views, obviously, in terms of where this economy is headed. The strength of this economy obviously ebbing going into the last month. We started to see some weakness in terms of the consumer that we had not seen. Is it your judgment that this economy is stronger than some would have it?
Well, you know, I think those who saw weakness weren't paying any attention to the positive factors that continue to exist in our economy. And the last few months, I thought the positives outweighed the negatives, not by a lot, but by an amount, and that with the flow of funds that was going into the economy a week ago today, I would have said then, and I will say now, I think we're on the move back. We have a resilient economy. You know, the crops are still growing in the fields, and the people are still showing up in the factories, and the shopkeepers are out there. Even here in Midtown New York, you can begin to feel a quickening pace again. We'll get our act together. We're going to be okay.
No recession?
I don't think so.
And in terms of the event that precipitated all of this, the devastating terrorist attack on the World Trade Center and the Pentagon, all of that, whether one looks at it geopolitically in terms of terrorism, howsoever, fundamentally there are economic and financial underpinnings. All that happened required money, planning, sophisticated maneuvers of money. Has your department and other agencies as well, have you found any links, any indications as you go from bank to financial institution around the world looking for the money of Osama bin Laden and other countries or organizations?
Well, you know, I think for some time we in the United States have lived in our minds in a world that was free from terrorists and the murders, and it turns out we were too soft in our understanding of what could possibly happen to us. And what you're going to see now is an all-out attack on, first of all, labeling terrorists and suspected terrorists, and then systematically going after their financial assets, not just waging a usual kind of war against these kind of people, but waging a financial war and enlisting the leaders of civilized world countries and their financial institutions in helping us identify who these people are and where their money is and taking it away from them.
Mr. Secretary, let me put it straightforwardly. There are countries and banking systems within those countries that have said they are either neutral or not to be in any way complicit in an investigation by the United States or any number of other countries. The president has said you are, in effect, either with us or against us. Does that apply to international banking?
Absolutely. Absolutely. The civilized world needs to band together. We need to use all the tools that are at our disposal to get these people, and we intend to do that.
Mr. Secretary, we thank you for being with us on this opening day of the New York Stock Exchange and return to what we hope is normalcy in U.S. markets and markets around the world.
Thanks for having me.
Well, amongst those markets, of course, importantly, the bond market. Now, bonds normally rally when stock prices decline. But today was an exception as the decline in the equities markets as they reopened today swamped the bond market as well. Economics correspondent Kathleen Hayes is here now to explain what happened. Kathleen.
Hi there, Lou. And as we talked about last week, the bond market was already expecting the Federal Reserve to cut rates. Right. That's one reason why we didn't see bonds doing better, and in fact why we saw a bit of a sell-off. And when I say a bit of a sell-off, for example, the 10-year note down a half point, the yield back up to 4.61%. The 30-year bond, the long bond, down about 7/8 of a point, the yield at 5.41. Another reason people said is, stocks did poorly, but some people thought they would do even worse. Now, in terms of what the Federal Reserve did today, cutting its key rate by a half percentage point, it's not just what they did, it's what they said. The Fed said in its policy statement they will continue to supply an unusually large amount of liquidity to the markets as needed. That's important. They're going to stay very friendly. The Fed said that the economy was already weak in terms of employment, business investment, and spending, and in light of last week's tragic events, it could weaken more. Finally, in the directive, they left the door open to lower rates by keeping their focus on a worry about weakness in the economy. That's Fed speak for if we do anything next, folks, it's going to be another rate cut. In fact, a former Fed governor says that next rate cut could come at the next meeting in October.
The Fed will undoubtedly then at least do another 25 to a 2.75% funds rate, or possibly, and hopefully, they'll do another 50 on October the 2nd. The Fed hasn't finished this process of easing.
I want to look at a couple of other important markets. You might think that oil prices would be surging right now. Well, today they didn't. Light sweet crude fell some 72 cents. A couple of things happened. The U.S. asked OPEC to supply more oil to ease prices and help the U.S. economy after last week's attacks. Also, people are looking at the weak stock market as a sign the U.S. economy is going to weak. That means less demand for oil. In the currency market, the dollar has been pretty weak, but it did manage to advance today. The Bank of Japan intervened to stop the yen from rising. That means supporting the dollar. Japan's economy is so fragile. The last thing they need is a strong currency that would choke off exports. The dollar also managed to improve against the euro. Interesting that we saw the European Central Bank cut, the Bank of Canada cut, the Swiss National Bank, Lou. Everyone's jumping on board, but people said, not too much growth anywhere, so actually those kinds of calculations didn't have too much to do with exchange rate movements today.
Not much growth, but everyone looking for it.
That's hoping, maybe. Yes.
Definitely. Thank you very much. Well, important to that growth, certainly in this country, will be consumer confidence, and there had been some signs of weakening in that consumer confidence. But as a result of these terrorist attacks, those fears of weak consumer confidence have heightened over the past several days. Casey Wyan now reports from Los Angeles that the impact may be overstated.
Some called it patriotism, others therapy. Whatever the reason, many Americans went shopping over the weekend. At the Glendale Galleria, traffic returned to near normal levels after a sharp drop following Tuesday's terrorist attacks.
We have all the confidence in the world, and we can't let them run our life. We have to live our life the same way that we were living before, because if we change it, then they're going to win.
Well, I guess trying to get a break from everything, and just, I had to pull myself away from the television.
Most retailers, including industry leader Walmart, report traffic returning to stores after a lull last week, but sales slightly lower. Reminders of the attacks are everywhere, from mall memorials to retailers collecting Red Cross donations. The tragedy brought back painful memories to the manager of this Sears store in Northridge, which closed for 10 months following the 1994 earthquake. Since Tuesday, sales here have been slower but are improving.
The customer dictates when they want to come back into the marketplace. As soon as they have confidence again that in their jobs and in their safety, they'll be coming back in.
It took 4 years for consumer confidence to recover following the Gulf War. Before the World Trade Center and Pentagon attacks, confidence was already at its lowest level in nearly 5 years. This time, economists expect federal money for rebuilding, military needs, and banking system liquidity will help keep cash in consumer hands.
Anyone who wants to go into his or her bank branch and cash out their deposits, well, the only question they'll be asked, would you like it in 50s or in 100s?
Several retailers report customers buying plenty of what they need, but not much of what they want.
Yeah, this is 2019.
Consumer reaction to the terrorist attacks will be included in next week's Conference Board report on consumer confidence. That should provide a clearer picture of what long-term impact the terrorist attacks will have on consumer spending. Lou.
All right, Casey, thanks very much. Casey Wyan tonight from Los Angeles. Well, consumer confidence only one of the challenges now facing this economy. Chief Economist John Lipsky joins us now and has a perspective on this. As always, John, good to see you. So. Are you encouraged at all by some of the upswelling of national pride, some of the contrarian views now following those terrorist attacks?
Well, of course, I'm sure that has been the response of government at all levels, local, state, and national, has been very effective, and I'm sure that will be helpful going forward.
How concerned are you about the prospect of recession?
Oh, quite. And not because of the events of last week.
Right.
The economic impacts will be relatively short-lived. More concerning has been the slowdown in income growth and the drop in consumer confidence that you mentioned earlier. It seems very likely that we're going to have a decline in GDP in the third quarter.
A decline in GDP for the third quarter, that makes the fourth quarter very important in your forecast.
Yes, it does.
With the classic definition of 2 consecutive quarters of decline. What do you think about that?
We think, again, in the fourth quarter we're going to have another contraction in GDP as we get a knock-on effect from slowing consumer spending and a new round of cutbacks on the corporate side.
Treasury Secretary O'Neill today told us that he believes that we're going to see records set in this market over the next 12 to 18 months. He believes that we're going to avoid recession. You just think he's flat wrong?
Well, I hope he's right, but it seems to us that in the near term we're going to, a negative quarter this quarter seems almost inescapable. It seems very likely that next quarter will be similar, but we're getting strong policy action. Just as we think that the economy is dropping in the current time, the recovery is going to be sharper.
When you talk about strong policy action, we're talking about 8 consecutive interest rate cuts, 3 intermediate cuts. We're talking about tax rebates. We're talking about energy prices that are remaining under control. I don't know if we should put that under policy. But we're also talking about what appears to be a large fiscal stimulus to this economy through resulting from these terrorist attacks.
It seems likely that that's going to be part of the response. But the Fed's not over yet. And given the normal lags with monetary policy, we should be feeling the effects in the coming months of the actions the Fed's already taken. We'll be feeling more next year based on the action that we think they're likely to take in the coming months. Add to that fiscal spending, and that starts to put together a potent brew for the second half of next year.
Your forecast capped in terms of GDP growth for the year 2001. What percent?
For 2001, it looks to us like we're going to be basically flat, just up slightly for the year.
And the unemployment rate?
Unemployment rate this year and next is probably going to peak something between 5.5% and 6%.
Did you get the feeling tonight that I'm resisting your recession forecast?
I do indeed.
It's always great to have you with us, John Lipsky. Thank you very much.
Lou.
Well, as we turn to the matters of the economy, they made their way by water, by ferry, by land, and they drove and walked all the way to the nerve center of American capitalism today. We will have that story next.
They're coming through town. Williams volunteers from all over the country, riding along pipeline routes, raising money for the United Way. Last year, $16 million. This year, even more. Please support your local United Way with a contribution that stays in your community. We don't think of it as charity. We think of it as our investment in a better world.
Enter a new era of discovery at Bristol-Myers Squibb, where groundbreaking genetic research is underway.
Winning the Tour de France was a victory for cancer medicines. But Luke, it's just the start of incredible things to come.
At the Bristol-Myers Squibb Center for Applied Genomics,